I'm going to answer what I believe are the 6 best stocks to buy right now for long-term investors. I'm going to share with you how this portfolio of stocks that I've been picking and updating every month since the first day of January of 2025, how my portfolio of picks has performed against the S&P 500 index. And I'm going to reveal to you one major change I made to this portfolio over the last month and some changes I've made over the previous few months. I'm going to share with you why I'm picking these stocks and why I think these are the best stocks to buy right now, including a perspective on valuation. So without further ado, let's take a look at these new exciting companies.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, so my pick for the best 6 stocks to buy right now are NVIDIA, Amazon, Eli Lilly, Pinterest, Uber, and Google. And my portfolio of stocks has returned 28.02% year to date in 2025. That's significantly outperforming the S&P 500 index, which is up 6.71%. If you had invested in my portfolio of picks, the best stocks to buy that I've been updating every month, you would have outperformed the S&P 500 index by almost 4.2. So over 4 times the return you would have earned with the S&P 500 index. Now already I've removed some picks from my portfolio. I started the year with a list of 9 stocks to buy that I felt were the best stocks to buy in 2025. And I've removed AMD already, which returned 46% before I took it off my list of best stocks to buy. I also took out Oracle, which delivered 53% returns before I took it off my list. And today, I'm removing DraftKings, which returned 28.98% as of today, and I'm removing it from my list of top stocks to buy because the stock price has increased significantly before the company has improved its earnings and cash flow to justify as much of an increase. And so now, given the new higher valuation compared with the company's prospects, I think there are better investment, and I don't think DraftKings, even though I still have it rated as a buy, I don't think DraftKings deserves a spot in my list of top stocks to buy. And I can share with you my proprietary discounted cash flow for DraftKings. I value the intrinsic value of this company at $60. The current market price is $48. So when I account for a margin of safety, the stock doesn't appear all that much undervalued. What's more, when I look at it on a forward price to free cash flow or a forward price to earnings basis, the stock still, it looks undervalued, but not as much as it was in other parts of this year. And so now, combined with that increased share price return, I've removed it from my list of top stocks to buy. So I mentioned the forward price to earnings ratio, and when I go to fiscal.ai, which is my preferred data provider, there's a link in the description if you're interested in cool charts like these, where you can find the forward price to earnings ratio. These stocks, the 6 that are still on my list, are attractive investments. Amazon is trading at a forward price to earnings of 33. NVIDIA is trading at a forward price to earnings of just 30. Uber is trading at a forward price to earnings of 29. Eli Lilly at a forward price to earnings of 26. And Google at a forward price to earnings of 21. And last but not least, Pinterest is trading at a forward price to earnings of 18.77. Interestingly, Pinterest is the most recent stock that I bought for my portfolio. I own, out of these stocks I've listed here, I own Pinterest, Uber, Google, and NVIDIA for my own personal portfolio. And I'm interested in adding shares of these other companies as well that I don't already own. So I see these companies as being undervalued and attractive risk versus reward for long-term investors. So now let me go back to the performance of the portfolio. The portfolio has returned 28.02% year to date in 2025, and we still have several months left in the year where these stocks can continue delivering excellent returns to shareholders. They can also turn south, and the returns could underperform the S&P 500 index. I've been providing you with a monthly update of my portfolio return based on the performance compared to the S&P 500 index, and in almost every month, my portfolio return has outperformed the S&P 500 index, but not every single month. There was at least one month where my portfolio was behind the S&P 500 index. And there is no certainty that my portfolio will continue outperforming the S&P 500 index. However, I do think there is a better than 50% likelihood that it will, based on my research and analysis and valuation and applying my 6-step framework for evaluating stocks. I feel relatively confident that these stocks will outperform the S&P 500 index, and even beyond that point, even beyond the rest of this year, I think these stocks will outperform the S&P 500 index. One of the reasons why I'm bullish on some of these companies specifically, for instance, Alphabet, it's trading at such a cheap valuation, and it's because the risks investors are placing on changing consumer search behavior, I believe, are overweighted. They're overweighting those risks to the downside for Alphabet, and that's allowing investors to buy Alphabet at a relatively cheap forward price to earnings of 21. A business of this magnitude, of this level of success, with this level of competitive advantage, will normally trade at a much more expensive valuation. Additionally, Uber is in a similar situation, and interestingly, Uber I've rated as the best stock to buy, the overall best stock to buy, and it's trading at a forward price to earnings of 29, and a business with this kind of characteristic usually trades at a much more expensive valuation, but again, investors are overweighting a significant risk, which is driverless car technology, especially as is being developed by Tesla. Investors are concerned that if Tesla develops its driverless car technology, it will kill Uber's business. And for that reason, Uber is trading at such a cheap valuation. I think those risks are overblown. I think the probability that Tesla develops its driverless car technology in the way that they're suggesting they will, meaning, all of the things that they say they're going to be able to deliver, the price per mile, the technology that's going to go into it, the cost to produce each vehicle, all of those things I think are being overestimated, as is characteristic by Tesla to overpromise and underdeliver. But many investors in the market have taken Tesla for their word and have downgraded Uber's prospects as a result of that. And I think that's created an opportunity for investors. And I've been saying that all year long. And I'm happy to see that Uber has delivered phenomenal returns. It's up over 55% year to date in 2025. I'm extremely happy about that. I own Uber shares myself. I've been recommending and rating it as the best stock to buy. So I'm very happy to see the performance of Uber stock. So, as I always say, every time I report my portfolio and the results of this portfolio of stocks, I tell investors not to just trust these picks and don't do any research and just go and buy them because you start getting comfortable that my portfolio continues outperforming the S&P 500 index. It's outperformed all year long in 2025. My picks outperformed in 2024. They also outperformed in 2023. So you might start to get comfortable and just say to yourself, well, I'll just listen to Parkev's picks and I don't need to do any research myself. And I think that would be a mistake. I think these types of results are short-term in nature. I don't expect to be able to outperform the index by this magnitude for any long period of time. And so I think it's extremely risky not to do your own due diligence and do your own research. You can use my portfolio as a suggestion to consider these stocks for yourself and dig into the details yourself. I have dozens and dozens of videos on all of these companies on my channel. I suggest you watch many of them before you make a decision on buying or selling any of these stocks. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.